All right, and we're underway. So it's well, about 6:30 in the morning here in Dubai, and the market is open. This is great. Last time I was awake at 6:30 in the morning for anything trading was when I lived in Colorado, and that was 3 years ago. But the beauty is it's what 9:30 p.m. Eastern, and the futures market is open. That's great. If you look at my chart here, it's a 30-minute chart. I can sit and wait for setups right now. Well, I don't see anything. It's just a mess. But if something does set up, it's a decent time to take a trade. What I like is that the candles are small, so it's easy to put on risk and then wait for the big candles to come around. You just leave it for hours. If you look at the lines on my chart, it's basically 23 hours. So the market's open. We're pretty much near the market open. It opened a few hours ago, and it was perfect for the way I like to do things. Put on a trade now, you can give it 20 hours to really work itself out. That's what I like about it. Anyways, we're here. Anyone got any questions? Anything you guys want to discuss? It's a slow time in the market, so it's not crazy and frenetic like the open. And we can go through trades or questions you've got. Let me know. Yeah, Dan, go ahead.
Yeah, good morning. Good evening, everybody else. So when you talk about chart patterns, and you talk about the patterns on the 30-minute chart. So if you see in fractal pattern, if I see an identical pattern on a smaller time frame, okay, so that's a go light. But what I'm trying to understand, I've been studying your 30 minutes patterns until I was blue in the face. So it's the basic principle that a 1-minute chart pattern will be reflected the same way on the 30-minute patterns in terms of its meanings. You with me?
Yep.
And so just the last point, that you don't have that many bars to work with, not many candlesticks to work with.
Mm-hmm.
So anyway, that's my vague question, I guess.
Mm-hmm. Yeah. So that's a good one. And the way that I think about it is, yeah, you pretty much got it. If you're getting, let's say, a bullish setup on a 30-minute chart, then go into a 1-minute chart and see if you're getting a bullish setup there as well at the same level. Once you get both of those giving you the bullish setup, off you go. You can get into it. I can find you an example here, I think. If you look at this price action earlier today, well, yesterday from earlier today, you had the high of day here and pulled back, and it got to high of day, and it did this 3-bar play where it goes up, consolidates for 1 bar, and then the next bar shoots up. So that 3-bar play was setting up right about here around 1 o'clock Eastern. This is a 30-minute chart. Let's look at it on a 1-minute, and it's right here around 1 p.m. Eastern. You can see that it dropped and went back up. And on a 1-minute, what you're getting is basically an ABCD pattern where it goes up, consolidates. That's that 30 minutes of consolidation, that 1 bar on the 30-minute, and then push up. So you're getting the same picture on the 1-minute as you're getting on the 30-minute at the same level. When I see those two things together, that's what I like to call a fractal pattern, and you can put a trade on it. So the entry would be about here, perhaps, and stop right below it, and you're in this thing. That's what I mean about it. So that's a more precise one where you're looking at basically an ABCD pattern on both time frames. The other way to do it, which is really similar, is you're looking for the same direction on the same time frame. So, if you see a bullish setup on a 30-minute, then and you also see a bullish setup on a 1-minute, you get the same thing. For example, let's go back to the 30 here. Let's see if we can get something. I don't see it here, but oh, here we go. Okay, let's look at this. Let's say you have this resistance zone right about there, right? And then you have the breakout. It pulled back, and bounced off of that breakout zone right there, that resistance zone. You can see it pulled into it a bit and then bounced off and went. So over here, basically, you have a retest of a breakout that happened a few candles before. So that's a bullish setup right there on the 30-minute. On the 1 minute, what you have is you have a move down and then a decent looking double bottom to go up. Now this double bottom is a reversal, which is very different from over here. This is a retest of a breakout on the 30-minute, and here on the 1 minute, it's a reversal. But they're both in the same direction. It's all bullish. Both patterns are bullish, and both patterns are in the same place. So I like to call that a fractal pattern as well. That's when I developed it a little further, I was starting to look at this stuff. So both ways, you can use them both ways. And I've used them both ways over the years, and they work great. Hope that answers that question. Does that make sense?
Yeah, it indirectly, I suppose. But what I just observed, where you guys are trading the futures, I don't. You have a lot more data to work with on the 30-minute candlesticks, as opposed to with the equities, you get a gap. Okay, well, what happened in between? You don't see that. Here you see it. Okay, thank you, AV.
Sure. No, actually, that's one of the reasons I do like the 30-minute chart compared to what most traders use, which is the daily chart. On the 30-minute chart, even on DOS, you don't see a gap unless there is a genuine gap. But yeah, you get to watch what happens in the post-market and pre-market compared to on a daily chart, it's just a gap. So you get those candle patterns. And I used to use that all the time when I traded equities, no problem at all. So 30-minute works well. The 60-minute is also very popular, but I didn't like it because, well, the market opens at 9:30, and the 60-minute candle opens at 9 and it closes at 10. So that candle, that opening candle, always got me all tripped up. So I just didn't use it. And also, I find it a bit large. It's too big for the day trading perspective. Oddly enough, now with futures trading, it might make more sense to move to that. Let's see, I'm going to move to that candlestick soon. Anyways, yeah, that's that. Cool. What else, guys? What else is on your mind? Oliver, what are you saying here? 6:30 in California. Yes. Good. It's nice and slow here. The thing is that the open at 9:30 a.m. Eastern, everyone's all over anxious about trading, so we don't get to do much Q&A. So this makes it a little easier coming on at this time. Works out well for me too. Let's see if we can do this. So I took a trade a little while ago. It was along here for the breakout and went. And then it didn't hit the target, which was 7,000 up here, but it liquidated at the close. So right about there. So got a little partial trade out of it. And that's that. For now, though, I see it hasn't gone anywhere. There's no room to the left. It's just choppy. But there is also the concept of this reverse hammer right here. And you can see at the top of it, there is room to the left, right? The entry, if you're identifying this as a reversal hammer, the entry would be the new low, which it's barely made a new low yet. So a new low and the stop above it, and you're going down. But I don't like this one, even though there's room to the left. It's a decent looking hammer. The reason I don't like it is because this is bullish, and for it to just absolutely turn around, it should really be a seriously good long tail hammer. This is hardly hammering. I mean, you can see we're just zooming in to find a little room to the left. You know, you're kind of pushing your boundaries here. So I'm not interested in the short here. To me now, this is pure chop. Remember, there's only two things the market does. It either goes sideways or it goes directional, right? Right now, it's just sideways. So unless you have a strategy to trade it sideways, don't trade it. Wait for it to become directional. It may happen now. It may happen in the next 20 hours. I have no idea. Just a matter of wait and see. And here's the fun part. When I say wait and see, I don't mean sit here and watch it for the next 20 hours. The way I do it is with 30-minute candles. I'll just check in on it every 30 minutes on the phone. It usually takes just a few seconds. Most of the time, it's just choppy. So there's not much to do. You can do it on a beach and still get on with life. Let's see here. This was a decent looking double top over here. Would have got a drop. Didn't really go all the way down, but you would have got a decent drop out of it. And yeah, these two setups. This was the breakout retest that we discussed, and then again the break of high day. Cool. What else is on your mind, guys? It's a little early for me to start coming up with stuff, so I'm not going to. Let me know what you want to discuss. Or if you have trades you want to share, we can go through your trades, screenshots, we can do all kinds of stuff.
Yeah, I like the idea of using alerts. I use Thinkorswim, and I can set alerts on my system, and that's a great way to kind of alert when things are getting towards like an hourly low or an hourly high, because the edges are where I really like to play, take a trade and enter. Do you use alerts?
No, not in the way that you're using them. So you're using alerts in basically on price levels, like hourly low, hourly high. I don't use that simply because I don't use levels at the moment. What I'm using is purely 30-minute candlestick patterns. And I don't know of any alert system that can tell me that a pattern has set up. The only way I can do that is by looking at it every 30 minutes. So effectively, my alerts are every 30 minutes on the clock, which means just every 30 minutes take a look at it. But alerts make a lot of sense. They make a lot of sense if you're using levels. So you want to wait for the price to get to that level, then take a look at it and see if it's giving you a setup that you like. I think that's perfectly fine. That's a good way. Again, it helps with detachment rather than sitting there and watch it get to a level and then eventually you're weakened to the point where you just take a trade that isn't really there before it gets to a level or a premature setup. Alerts are great. You can step away. You're not engaged with the market. You can do whatever you're doing in your life and only look at it when it buzzes. That's perfect. I think that's a good way to go. Much better. I'll tell you what, it's much better than the worst alert I've ever seen, which is the opening bell, the 9:30 opening bell. That is the worst alert because the moment that bell rings, it's like everyone in the world just freaks out and immediately becomes anxious and immediately starts to look for opportunities to lose money. That's what really happens to most people. So try not to use that one. Use the one that makes sense to you. Price alerts make sense if you're using levels. Or you can set alerts based on different indicators, moving averages and such things. And based on your strategy, you can set up alerts as you please. It's all there. This is the NQ, similar to the SPY, to the ES, not as clean. Oil market. Let's see what happened here. So the oil price crashed. Well, you can't call it a crash, but it went down yesterday. Well, today for most of you. Which again doesn't make sense with all the Venezuelan news. It should go the other way, but the markets never make sense. Oh, here's a setup. Look at that. Anyone see a setup right here on this 30-minute picture? Those of you who know about the naked trading setups, you see a setup right here? Anyone? I see one. This is interesting. Nobody?
You say based on the naked trading?
Mm-hmm. Yeah.
Hover your arrow over what you see.
All right. I'll put it right about there.
Yeah, the doji, obviously, pretty skinny and pretty tall.
Skinny and tall. Yep. That's it. That's exactly what I see. So what you have is the context is it went down. And then it's been sideways in the last few candles. So a consolidation, but during the consolidation, it's put in this reverse hammer. It's a long tail hammer, pretty tall. And there's room to the left on the top of this. So you're having basically a reverse ABCD with a long tail hammer in the middle of it. And the ideal entry then is the new low, which just happened a little while ago, to stop above it, and then you're continuing down. So this is a continuation setup, the way I see naked trading setups. But what you want to try and identify is that this whole setup is happening at a key level. Looking to the left, you have a level right there where it bounced off more recently. This was a low a couple days ago. So it slammed into the low, and it's just consolidating while putting in a reverse ABCD. And then you have the move down. So this is a 30-minute chart setup, which is it's a pretty good setup on a 30. For fractal patterns, then you'd go into the 1 minute and see what that would look like. Let's see what we have. So here's where it came down. Here's that long tail, 30-minute long tail hammer would be this little push up and down here. And the entry would have been in this area with a stop above it. And then you're just waiting for it to continue moving down. Otherwise, take the stop. So there you go. Pretty good setup there. I got to go figure out how to trade the oil market.
So AV, I know very little about the future. So what is the volume distribution in the 23-hour period, is it?
Mm-hmm. Yeah, 23 hours. So effectively, there's the majority of the volume is when the U.S. market is open. That's 9:30
Okay.
Eastern to 4 p.m.
Okay.
But we have the Asia session, the Europe session, and there's plenty of volume, as in liquidity. There's plenty compared to options, and even trading SPY options, which you saw me do last year. The liquidity is massive here. There's no such problem, even when the U.S. market's closed. You can go in with 100 contracts on the ES and have no problem with it. 100 contracts on the ES is massive. When you get that thing to move a little bit, and you're already into multiple six figures. So it's a huge size. So yeah, liquidity is not a problem, but volume, yeah, it's mostly during the U.S. market. But here's the thing, and I heard Ken Fisher said this in an interview some years ago. Ken Fisher's a successful investor, billionaire, all that. And he's been doing it for years. And he was saying in the 70s, there was a lot less volume in the markets than there is now. And what was interesting then is people say the market's more volatile now. It was easier to invest back then. He was saying it's not the truth, because back then in the 70s, there was less volume. So one big player could come in and really move the market. In that sense, it was more volatile and more dangerous. So, so you're thinking about volume, and when is it more dangerous or more volatile? Is it when there's less volume or there's more volume? Well, you can have arguments both ways. So I don't really have a bias of wanting to wait till the U.S. market opens so I can take a trade. I don't have to. I can trade. I can trade now in the Asia market. I think it's the Asia market open right now. Is it? I don't even know. Whatever. The market's open. It doesn't matter. So, anyways, as long as the market's open and there's enough volume, as it's moving, which I know this instrument, there's enough volume. Don't have to worry about anything. I don't even look at volume. It's just the major indices, right? Let's look at the gold market here. So what do we have on gold? This was a pretty decent resistance, broke out, dropped back in, broke out again, dropped back in. So, this is interesting. You have these pullbacks, right? As you see it going up, you've got a couple of lows here. What I like to look for is that whenever it drops and puts in a bullish candle, did it do that drop and bullish candle off of a previous resistance? In this case, kind of, sort of, right? There's your resistance. It didn't quite break out cleanly. It got messy, put in even a reversal pattern, and then broke out. So this kind of retest, you could call this retest, is not a clean one because of this messy behavior. So I'm not going to touch it. Next time it pulled back was here. And where did it bounce off? Again, now this area as well, the same place, more precisely. But just looking to the left a little bit, it's been choppy again. So I would hesitate to take this long, just because I know it's been a mess. Sure enough, this one would have worked. Then you have This little pullback here pulled right into this little consolidation, but still tricky. You can see it's not really clean as far as the consolidation to a breakout to a retest is concerned. So I'm not seeing a clean cut pattern here or clean cut setup on this. It's just been kind of grinding upwards. And these are the little subtle details I like to look for. I want it to be nice and clean because, again, in the end of the day, I'm going to put on some very serious size when I'm ready to trade. And I'm not going to be able to put on serious size on, half-baked patterns that are not quite there. I'd rather not take those little small trades. I just wait for a good clean setup, and they happen all the time. Might as well wait for it. Yeah, this is the Dow Jones. Anyone see a setup on this? We had this one 2 days ago. We were looking at this, pushed up. Since then, here we go. So we have the high of day here, and you can see it dropped and then got back into the high of day area. And sure enough, as expected, little consolidation before the breakout. Oh, I wasn't looking at this earlier. There you go. There's the setup. So consolidation here before the breakout. And this is on the 30. Let's go to the 1 minute and see what that looked like. What time was that? Around 11. Back here. All right, there we go. So on this 1 minute chart, let's see where it pushed up. And there's your consolidation. Well, pullback really. Then the break of the high. Right there. Pull back, bounce off, and off you go. This one is more clean. You can see this high of day, or breakout retest is more precise. This is where I'd be able to put on the size a little more. It's a cleaner setup. And then you get into this. This would have been huge if you took it on a 1 minute setup. You see there's plenty of opportunities everywhere. It's kind of ridiculous. And I think I've got a very strict kind of trade book because I'm looking for precise patterns on a candlestick chart. Even with that, I think there's massive opportunities everywhere. It's not too complicated. That's why I say I don't think there's any place for FOMO in this business, even though we all get it. There really is no rational place for FOMO. There's just opportunities everywhere.
Avi, I totally agree with you. I took a trade on that biotech ticker today, and I lost on that one, and that ended up closing my day. Not a horrible loss, maybe close to 2R, but I realized that had I just waited for my really great setup, there were 4 other setups today that I could have taken that I would have made really good R on each of those. I mean, minimum 5, maybe 6 or 7 or 8. And I realized too that, I think I mentioned this to you before, that for me, I can't trade the 1 minute chart. I've had some success with it, but there's so much noise, so much fakeouts. But the 5 minute chart for me is so incredibly clear for me to see my pattern, what I'm looking for, especially at key levels. I made a decision to just totally eliminate the 1 minute chart from my montage. Like, I physically removed it. It's not there. 5 minutes is the lowest, the smallest time frame, just to get it out. So I'm not even tempted to look at the 1 minute chart anymore. And I just realized it's better to wait for price action to come to me. And if it doesn't come today, no big deal. But there are other days I see it, and sometimes I'll see my pattern 3, 4, 5 times in a day. I just got to wait for it. And so I think it's kind of tying into what you just mentioned.
Yeah. No, thanks for sharing that. That's excellent. Yeah, wait for your setup. It makes perfect sense because this is the financial market here, and it's a massive environment of abundance, ridiculous abundance. There's trillions of dollars sloshing around every second. All we need to do is capture a tiny little piece of that, and you're already making millions of dollars. It's just think of it in those terms, and my goodness, it's worth waiting 30 minutes for your setup to come to you, right? It's so ridiculous how we blow up such a small thing, such as just waiting just a little bit. And that's the whole problem with the whole day trading industry is people get overexcited. Everyone wants to trade the open because that's what the internet tells you, or gurus on the internet tell you. And sure enough, we have a very high failure rate in this business, 95% or something, because everyone's just overexcited, really, based on FOMO that they got from some viral video on YouTube or some nonsense like that. At the end of the day, you want to make money. That's what you're here for. Well, okay, make money. Wait for it to come to you. You don't have to go out chasing it like a used car salesman. Just wait for it. So that's the best way to do it. It's easy too. It's actually much easier. You're not stressed out, chasing price action at the open and all that stuff. Thanks for sharing. There you go. Real life example, guys. You jump into a trade, you lose money. You wait for it, give yourself a genuine chance to make money. Yes, Sahil, go ahead.
Yeah, I want your take on Apple's chart today. I find it quite interesting on 30-minute. Do you have it on your?
I don't. I only have NinjaTrader here, which doesn't have that
Okay,
information.
I'll share it.
Yeah.
Present. So this is 30-minute.
Mhm.
So it made a massive move. I'm just wondering, how can we enter in this kind of trade? So I took a trade here. So do you consider this one as a inverted hammer or just a doji? So I entered here and stop loss in the middle,
Mhm.
and waited for continuation. But yeah, closed over here, almost at break even.
Mhm.
But I see
Yeah.
inverted hammer over here as well.
Mhm.
So it's kind of a big move at the open, but how can we kind of enter in this kind of moves?
See, right at the open, where it started to get bearish, and then it dropped through that looks like pre-market low and the previous day's low. That would have been that first 30-minute candle. Once it gets into that level, yeah, right about there, that's when you could get into a smaller time frame, 1 minute or 5 minute, and look for reverse ABCD right over there at a key level.
Mm-hmm.
Right. Well, you look for either for it to bounce off of that, which it could because that was previous support, or if it doesn't hold as support and goes through it, puts in a reversal pattern, sorry, a bearish pattern, which is would be a reverse ABCD, then you have an opportunity to get in there. Now that's trading on a smaller time frame. You're picking the level on a bigger time frame, in this case the 30, and then trading on a smaller time frame. So that's one way to do it. The other way is, as you saw that reverse hammer further down, and then looking
one,
for
right? 1030.
No, after that, because that one there's no room to the left on that. I don't see anything there. But if you go further down to the low of the day, and then you see this consolidation, and then it put in that long wick during the consolidation.
This
Yeah,
one, right?
yeah. So that's the one that would get me interested. And then a new low beyond that would be
Right
the
here.
entry. I think. Yeah, pretty much where you took it, I think. And but now you're trading a 30-minute pattern, right?
The thing
which
is,
means-
this one stop loss is going to be too wide.
Yeah,
Right.
exactly. You're trading a 30-minute pattern, stop loss can be wide. So now for this to even work, you're gonna have to give it many, many hours for it to run and get 10, 30-minute candles, for example, to even work. So then the way to do this is after you see this 30-minute reverse hammer or this big wick, is then zoom into the 1 minute down there and see if you're getting some sort of bearish activity. So there you go. You got the yellow line at the wick, and if you look at the 1 minute, it's all a choppy mess. On this screenshot, on this screen, I can't see any setup to get involved. So I wouldn't get involved.
Okay, so this was the wick. Yeah, this one.
Yeah, that's it up there. And so after that closed, it's just been sideways and there's no room to the left on the 1 minute chart. So don't touch it.
So room to the left means we need a gap like this one, right? Kind of
Yes.
this empty space.
Yeah, you want to see room to the left is an interesting one. So yes, you want to see a gap, but also you want to see the last time that it was there, how did it behave? Did it want to be there or did it not want to be there? You know, and if it was choppy, then you can see it liked to be there.
But if
The
I
last
yeah,
it didn't
going
be
5
there.
minute, it was looking bearish.
Yeah, they're looking bearish. But if you look at this 5-minute chart, this yellow line you've got, you know, at the top of this wick, if you just go follow your yellow line to the left, it was making that big bearish move, right?
Yeah.
You know, and so you can see it doesn't want to be there. It's a place where it moves. It's not a place where it stagnates, most recently. And so that gives you an indication that that could be a good place to get involved, as in there's room to the left. That's another way to look at it. So you have the space, and also you can see the last time it was there, it didn't want to be there. It wanted to move. So those are the clues I like to look for. And one of the key things I tell you is room to the left. Most of the time, by most, I mean 95% of the time, there is no room to the left on all time frames. So that's when you don't touch it. You just leave it alone.
So we don't consider this one room to the left, right? So this
Not
is
on not on this 30-minute chart, because look, there is no space on the chart, right? There's absolutely no space. It was just there the previous candle. So you want to be careful with that sort of thing. So you want to have room, and then you keep following that space to the left and see what it did the last time it was there as well, just to take room to the left to one more level deeper. But yeah, there's no room to the left on that second 30-minute candle, second and third.
yeah.
Mhm.
All right, thank you.
Yeah. So yeah, I think a key concept here to pay attention to is just because it moved doesn't mean that it gave you a setup that you should have taken. So this happens all the time. The markets move and tickers move without you. That's perfectly fine. As in, get used to it. It happens all the time. So just because it moved doesn't mean now you got to look at old screenshots and figure out a way that you could have entered it, and then tomorrow when the market's open, you're going to try and enter it. That's not trading. Now you're chasing your own tail, and you're causing a lot of trouble. So please be careful with that.
All right, thank you.
Sure. All right, here we go. What else, guys? What else is on your minds? Look at that. It's just about sunrise now. Love it.
Avi, can you hear me?
Yes, go ahead.
So when are you going to write a book?
A book. Oh my gosh. That is the opposite of 80/20, just sitting there and writing a book. Everything I got to say can be said in about 3 sentences. I don't know how to make a book out of it. Oh my goodness. If I write a book, first it's going to take me a while, as it typically does, right? And then editing and all that. I don't even know if it's worth my time. And then I got to go become a salesman. It's just not me. I don't like selling stuff. Doesn't make sense. Everything that I've got to share is being shared in here already, and it's always being recorded anyway. I don't see why you guys should have to pay for it. Makes no sense. Then things keep evolving anyway. By the time I write the book, you know, we'll be trading something else or looking at something else. It doesn't work with me. And as you guys know, 99% of all books ever written are full of crap. There's only very few books worth reading. And typically those are books that were written a very long time ago. That's how you know those are the good ones, because they're still being read these days. So okay, those are the ones I tend to go and pick up. Otherwise, you know, nowadays, especially with AI and all that, everyone throws a book together and it's garbage. The Bible, Mark. Yeah, if you're into religious stuff, the Bible. Here's one. Yeah, look, this one's right on my desk here. 80/20. There you go. This one stays. But most books are full of crap. I mean, you know how many books are out there especially in the trading world, that are people just going into various chat rooms or communities or whatever, or taking online courses, and then throwing or copying the courses, pirate them basically, and then throw them onto some chat GPT thing or something, transcribe them, and then publish it as a book, and then put their name on it, and then get sued for it. It happens all the time in this industry. I mean, even the bestsellers and all that we've got here in the trading world, a lot of the authors have been sued. All of them, a lot of them. It's ridiculous. It's very common. I've seen this enough in this business. So as far as trading is concerned, I mean, it's a put it this way, it's a very easy environment to go and bullshit. Really just bullshit people. You know, that's why we have a lot of nonsense on the internet, a lot of these pump and dumps and chat rooms where the guys running the chat rooms don't even know how to trade or don't trade, or more than anything, they're just content creators and traders, or entertainment. You know, they're providing entertainment on the internet by jumping up and down on candlesticks, or you know, they're good actors basically. Commentary on candlesticks, not traders. And then they go throw books together and they get sued for it. That's, I mean, shit, I know enough people who've had that, who've done that, and I don't want to participate. It's not an environment and not the kind of people I like to be around. So now to answer your question, I don't know why I would write a book. Even if I would do it, find some editor and tell them, go look at all my videos and put a book together based on it. You know, and even then, what's the point? Because it's already there, it's free. If you guys want, you can go to YouTube and hit the CC button, closed captions, and there you go. Print it. That's your book. It's already there. So, yeah.
You know, speaking of books, Avi, I enjoyed reading Steve Nissen, Japanese Candlestick Charting Techniques, both his basic, and I think he has an advanced book on that too. Anna Cooling, A Complete Guide to Volume Price Analysis, if anyone likes to look at volume and have that as part of their trading plan. And one of the first books I picked up when I started day trading was A Beginner's Guide to Day Trading Online by Tony Turner. And I kind of enjoyed that because it's written by a female, and you know, this is a male dominated business. And I remember reading there was a few nuggets here and there, and I appreciated getting sort of a female counterpoint to trading. So I don't know. Those were a few books that I picked up along the way that I found useful in my journey.
Awesome, man. Thanks for sharing. Yeah, there are definitely good books out there. And a couple you mentioned, I'm familiar with them, with the Candlestick book and the Anna Cooling book. But just like that, there are a million other ones out there in trading, right? So you find one or two that are actually worth reading. So yeah, they're good. The thing about the Candlesticks book that I discovered through Tom Hugard is that Steve Nissen put the book together, all the information he went and researched in Japan and all that stuff. But as far as actually trading is concerned, he's not a trader. He's basically never taken a trade. He does run a trading community. I did join it years ago. I left in like a week or something. He's not a trader. Doesn't put on trade. He'll put on commentary. Here's the candlestick setup, and it's not here, and it is here. So you're missing out on that human element of trading, which, you know, to me, that's the biggest part of it. It's huge. You know, understanding candlesticks, you can understand it. Shit, I can show it to you in 5 minutes. But being able to really trade, able to really execute, that's I think that's where the value is. Because by value, I mean in the end, you want to be here, able to make money out of the financial markets, be able to trade it, short-term trading. And well, there's many steps to get there, but the biggest step is the psychology of it, right? So you want to make sure you're getting that information. Focus on that much more than on, you know, technical stuff. And candlesticks are the most easiest, most basic bit of technical analysis. So, and I think that's all you really need. So fine, get that information, but then make sure you're able to trade. Key point, rather than getting lost in incredibly detailed and unnecessary candle pattern setups. You know, there's 3 candles pattern setup, and then 4 different versions of it. Man, you don't need that. Just need to know what a 3 candle setup is. That's it. Then the rest of the details of it come out when you really put on risk. Your mind will start working differently, and you'll realize it. That's when you learn, rather than reading too much. So at least that's my experience as well. But yeah, there are a few good books out there. Only a few. Be very careful. I don't read much, actually. What I do is I have a lot of books. I've bought a lot of books. I continue to buy a lot of books. And then I go through them in the 80-20 way, which is always read the back cover and the front cover. There's always a lot of information there in just a few paragraphs. Then read the intro and the conclusion, and then selectively dip into particular chapters. That's how I get the majority of what I need to get. A lot of times, just reading the back cover and front cover, I realize it's not even what's going into the book. So that's how I do it. Yeah, Dan, go ahead.
Yeah, I don't mean to be hogging the mic, guys. You were talking about Tom Hugard with a commentator who doesn't trade. Did I hear you right?
No, not Tom Hugard. Tom Hugard is a trader, a freaking outstanding trader. I'm talking about Steve Nissen, the guy who wrote the Candlesticks book.
Yeah. Okay, thank you.
Mm-hmm.
Yeah. Hey, and another question, if I may. Do you journal your charts after the trades, and how detailed are you in your commentaries, if any?
Yeah, nowadays I don't do any journaling anymore. Let me put it this way. What happened with it? It was, yeah, so my journal last year was nothing more than the recordings of the live sessions. And then I discovered, well, okay, let's just go back and so I can give you the whole thing. So I started journaling with using Chartlog at one point. That was probably 3 or 4 years ago. That was useful. And I was very detailed with setups, which setups I saw, which setups I took, and which trades I took without setups, all of those details, and figured out RVR and what was making money, what wasn't, what time of day, even all that stuff. So I was using software to help me with that, and it got me a certain distance. And then it stopped being valuable to me because one thing I was missing in the journal was accountability. There's only so far I could go with self-discipline. So I needed accountability. So then I changed it, and I started using the whole Twitter community. Back then it was Twitter. Used the whole Twitter community as my accountability. So I had no followers or anything like that, but I just throw my screenshots out there on Twitter every day. Winners, losers, everything with the P&L. And bit by bit, people started commenting, and people started to get used to or started to expect certain style or types of trades out of me. And so that became my accountability. I'm basically using my own ego to my advantage. Like, all right, so I'm now being expected to do these kinds of trades. I better make sure I do it and then provide that screenshot at the end of the day. So that was my way of using a journal, and the accountability aspect was massive. It really did help with my discipline and making sure I become consistent with my execution. So that's how I built up the Twitter account, basically. It was not really a matter of trying to find followers or anything, but it was always a matter of trying to build up my own trading by using the public domain as my accountability partner. And then that evolved more into 2024 and 25, where I realized, of course, there's always going to be winning and losing trades, but I realized that I should not be taking screenshots of losing trades because of the psychology of it. So the one thing is, the more you look at something, or the more you expose yourself to something, the more you are reliving it, and the more you're reinforcing it. So what I want to reinforce is positive winning trades, excellent setups, excellent execution, and then excellent result. It doesn't always work that way, but when I have that, that's the only one I screenshot from now on. And then I started putting those out there. Well, not because of accountability anymore, but this is more about my own psychology, because I want to reinforce absolute champion mindset, put it that way, where I do the right thing and I expect the right result, and that's it. Nothing less will do. And when I started doing that and just basically reinforcing pure positivity and ignoring the negativity means even and doing the right thing, correct execution, but still losing on the trade, I wouldn't even screenshot that. And of course, I wasn't using the journal software anymore. So by reinforcing this absolute positivity, then my confidence went up as well. And this, you guys saw this happen in late 2024, I think, or mid 24. And I was able to get bigger with my trading and put on more risk, and then also find ways to hold on for bigger moves. So on all aspects, my trading just got much bigger, and then absolutely exploded about a year ago, in the middle of 25 or so. And now my journal is just the same as that. I only really screenshot absolute good execution and good results. Nothing else. Absolutely nothing else. I don't bother with anything else. Any other trades you may see might be while we're in a while we're in a live session like this, and I take a trade, and that's it. That's all there is. So that's how I journal. That's been the evolution of my journaling journey. But I gotta say though, the first 2 years or so, I didn't journal anything. I just get out there and follow some idiot in a chat room into some trades, and it's going long, ORB is going short, ORB, whatever, and ended up losing money. It took me 2 years to figure out, I should start journaling. So that's how I do it now. But it's an evolutionary process, and so you got to pay attention to what makes sense to you. There are all kinds of journals. You can journal on an Excel sheet. You can journal on a notebook with a pen or a pencil. You can journal with software. There's so many ways to do it. There's no wrong way. But in the end, you got to make sure that you are absolutely focused on reinforcing good habits and good results, whatever that means to you. So for me, it's I just absolutely ignore any negativity completely. It's a bit odd, but that's what works for me. So I just do that. And one thing I really like here with NinjaTrader is that you see there's no executions on any of these charts. You see this MES. I told you I took a trade here 3 hours ago and I got out here, so that was a positive one. But there's no execution. You don't see the little triangles here, and I like it this way. Because the moment I start seeing triangles and I start thinking, I should have taken this entry, that would have been the stop loss, that's a target. So I don't want my mind to go into that realm. That's just a mental mess. I'd rather just look at the candlesticks objectively without having anything that brings out any sort of emotion. The moment there's money at risk and any executions, then emotions come into the picture and I start thinking about that. So I don't want it. I just don't expose myself to it. It's very, very simple. So there you go. Journaling for me is now, it's all a mental game. I just want to keep my psychology in the right place. And everything else I know just works out just fine. No big deal. So there you go. A little long-winded, but that's me with journaling. Don't take that the wrong way, guys. I think journaling is very important. Just got to figure out what makes sense to you. Man, the coffee got cold already. What the hell? Anyway.
For me, I'm a visual person, so I like to take screenshots of my trades and then mark down, do like a text box with arrows pointing to, well, this is why I did this, or where I got in, but this would have been maybe a better entry here, or something like that. But I totally agree with you. I really like to focus on what really works, because then I'm going to emulate that. I'm going to be looking for that, and then I'll be emulating success instead of always focusing on what was lost, negative, because I want to focus on the positive and focus on trading wisely.
Mm-hmm. Yeah, I agree with you. That's it. Focus on the positive. And yeah, the visual thing makes sense. I'm very visual too. I much prefer taking screenshots than typing stuff out in an Excel sheet. You should see the Excel sheets I put together. They're funny. I started them with maybe 10 different columns and lasted like 3 days. I'm like, no, forget about it, man. I'm going to journal every single trade and do all these details. But there are people who love doing that, and that gives them a sense of comfort. So good thing is you're aware of what works for you, being visual. And then visually, it stimulates you, and you you reinforce it and then you end up emulating it, and then it becomes instinctive, really. So good stuff. Gotta know what works for you, and sometimes it takes a bit of trial and error to figure out what works. You know, that's the good stuff. Oh, here, I'll tell you another thing, guys. This would have been, I think, first quarter of last year, so a year ago now, where I was looking at the trading I was doing. I was in the room here with you guys and telling you that I was trading, making money, but I'd be done within the first half an hour most of the time, and then the price action makes enormous moves, 10 times bigger than anything that I captured, and that started to really bug me a lot. I realized, what the hell am I doing with this 1 minute chart stuff at the open? This was a joke. So just getting so frustrated by making money, making good money, a few thousands of dollars every day, and then stepping away, but the next 6 hours the thing would just run so much more. But watching that consistently, money not made, money left on the table, seeing that so consistently really bugged me. And that's when I really started to figure out, how do I capture that big stuff and not play with the amateurs at the open, basically. And then you saw my trading change quite dramatically in the first quarter of last year. And you saw what happened in the first half of last year. It just got massively bigger. And then the appetite got bigger, and then we ran into other problems. I ran into other problems, which was basically liquidity. Now there's not enough liquidity in the options market, at least. And so now I'm here with the future stuff, trying to figure this out, and then I'll size it up when I'm ready for it. So again, you got to be self-aware, figure out what makes sense to you. If something's really bugging you, well, go solve the problem. And that's the way to keep moving, keep evolving. That's really, really important. You got to keep evolving. I don't know how to be stagnant. That doesn't make sense to me. If you're genuinely a trader, you'd be evolving your trading, as in always finding ways to make it more efficient, less risky, more profitable. If you're not genuinely a trader, your trading would probably not evolve. You'd probably just keep doing the same thing over and over again. And there's some good points to that. But eventually, just as a human being, you'd kind of lose interest. And if you're not evolving your trading, then you're probably not focused. You're probably evolving something else. If you're running a chat room or something, you're probably trying to evolve different kinds of repackaging subscriptions, or if you have some other job, you're probably doing that. You're focused there. You're not really focused in on trading. Whatever. But you got to figure out what your thing is, what's your priority, and focus on that. So for me, that's trading. Absolutely, number one thing. I just make my money on trading. That's first. Not building out, not writing books or courses or anything like that. Just want to trade properly. That's first. So it's going to keep evolving. So you'll see me change. And you guys have been around here long enough, the last 3 years or so, you've seen lots of changes in my trading. It's dramatically different now than 3 years ago. And it's going to keep going. The whole objective is to get bigger and better. That's fun stuff. So what else, guys? How's this time zone working out for you guys? What do we have in here? You guys, most of you are in North America. Evelyn, you're in Macau, right? So this works for you, I think, if you're there. Adiraj, I don't know what you're doing awake, man. You're in Dubai. Where else are you guys from? Most of you in North America, it's nicely evening for you.
Well, it's 9:30 in Texas, and at my age, it's bedtime.
Oh man, awesome. 9:30 bedtime. I just went to bed 4 hours ago, man. I woke up now.
No. So listen, thank you so much for doing this. This is great stuff. Hope you're recording it so I can review it later. But thanks again, and good night, guys, and we'll see you tomorrow.
All right. Good night, Dan. Thanks.
Night,
a
Dan.
lot. It's being recorded. Yep, we are recording. And yeah, what do we got here? Yeah, Ivo, you're in San Diego. Lana, you're in WA. What's WA? Washington? Or Western Australia? It's not Australia. No. They're on the West Coast. I bet somewhere. Washington. Yeah.
Yeah,
Yeah.
I'll be with futures. I think you're at a good time. From what I've noticed in the past, I've been trading futures about a year and a half. For me, at 12 midnight is usually when a trend will occur. So that's I think 12 noon for you, if I'm right, because it's 7:27 here p.m. in California, so it's 7:20 a.m. So yeah, so check out noon, and it kind of will give you a signal for a trend, either bullish or bearish. And it's nice with futures, especially with ES or NQ. It sticks with that trend. Even GC, the gold, they'll stick with that trend and continue. So not always, of course, not always. It's not a definite, but check that out. And then you have that noon hour where you can, you're up and going, and see what you can do with that.
Yeah, thanks, Oliver. That makes sense. I like this time of day. For me, at least, it's about 8-9 a.m. when it's basically midnight Eastern. And yeah, I like it. The trend set up. I've seen that a few times. Been able to capture a few little moves.
Yeah, it
Thanks.
seems to trend. Future seems to like to trend before that market open. New York. Obviously London and Asia open, I think at 1 a.m. for me, and then so it's 1 p.m. for you. And then I think London's a little bit after, or vice versa. I'm not sure, but I'm asleep at the time. But you're up, so take advantage of that since you're in trading now with futures, and it's not so volatile. But like again, it seems more like that trend. Like it's what's it called? Not industrial, but they're just buying up. It's just automatic. It's bots just buying, and they're sticking to that trend. So they're just buying, and then they have, market makers have a direction they want to go before the opening, New York opening. So, but anyway, that's just a tip.
No, I like it. Thanks. I've observed the same thing when I was a few months ago looking at the futures market. Yeah, there's definitely opportunities during this time, and like you said, the candles are small, which I like. It's small 30-minute candles. It's so good.
Not so volatile.
Yeah, you can put on a real good size and just leave it, let it run. And I like that style of trading. I really do. This would have been an area where I may have entered right about here. I'm just looking at this. Here you see a big double top. That's the middle of the day, I think. Yeah. Anyways, yeah, I've seen it before quite a few times. Good stuff. Thanks.
Yeah, and I like that idea of you hedging with options. So you're one way with futures, and then you either buy a put or a call on the other way to kind of keep yourself in the game. Because with futures, they can be at certain times they can be like they bob, like Thor would say, the lure in the water, they'll bob up and down to shake out people. But there is a specific direction that they want, and they're just shaking people out. But if you have that hedging, that can be a real advantage for you, especially because options. I don't know very well in options, but if you're a lot better at it. So yeah, take advantage of that and hedge that, and then you can use the two for like again as an advantage. You can use that to your advantage.
Mm-hmm. Yeah, thanks. I'll definitely be building that out further, exploring it further, see what I can do with it. Makes a lot of sense. Give yourself a chance to stay in the game. I like it.
Would you, because I was thinking about that today. I got stopped out at break even on a trade, and then obviously you saw what happened later on in the day. That hurts the soul a little bit. But do you think you would do it after it goes in your favor? Maybe you're up I don't know, 1 hour on the risk that you took. Maybe that's when you would enter the options contract just in case it goes back against you, or would you just enter it immediately? I know you were just thinking about it.
Yeah, I think entering immediately makes sense. I don't see why I wouldn't go wait for it. I think it just keeps it simple. Put it on, and you don't have to think about the stop out from the get-go. Just leave it And ideally, it gets to a target. When the futures gets to the target, you take off the futures contract and close the options. Mostly that'll just go to zero anyway.
Yeah. But how would you do the risk? Like, let's say you risk, I don't know, $1,000 on the futures trade. Yeah, I mean, I don't know how you're not really risking anything. You're not putting a stop. So, like, how would that work?
Yeah, so let's explore this real quick. Let's use this price action right here. So let's say I'm seeing this price action. I think it's a short. I'd enter a short right now with no stop above. So I'd enter short. I'd put a target down here perhaps. And I'd buy the put option here at 69.95, let's say. So where I would effectively put the stop, that's the strike to get. So 69.95. Sorry, I'd buy the call option, not put call option. So if the price goes up, that call option makes money. So 69.95. So now the way that works is if this is my futures contract entry for the short, and that's where my call option is at its strike price. This distance right here is where you lose money. So it goes from this entry short and it goes up against you up to 69.95. You keep losing money dollar for dollar until here. And what you'll notice is the P&L, the way I understand it, will stabilize. It will stabilize at some negative number, which you can pre-calculate. Let's say $1,000, and you put on the appropriate size. And then this price keeps going up, up, and up. But the loss between the two positions, one of them is making money and the other is losing money. Between the two of them, the P&L is stable. It's at a negative number, and it's stable. It's active, it's live, it's unrealized, but it's stable. So that's the way I understand it.
So
far.
when do you call it quits? Like, when do you close out both?
Yeah, well, with this market, with the futures market, just when the market closes, that closes at 5 p.m. Eastern. I got to figure out the options market. Options on futures, I believe that closes at 4 p.m. Eastern, I think. So you got to figure that out. So
Then you have to, but if you're keeping, I mean, there's also the time decay.
yes, there is. Now, here's the thing. If it goes in the money, right, it'll just keep going and making money. You're in the positive either way. Now, time decay does come into the picture when you're doing zero DTE. So you figure out, is that going to make sense to do zero DTE or go a few days out or a week out? I haven't worked out those details yet. But yeah, the things to think about, things to figure out. A lot of times, these hedge funds do this stuff with their longer term positions, and of course, they do long dated options because their positions are longer time frame. So if I'm doing these longer time frame moves, like a 30-minute part, I may want to go a week out perhaps with options and not think about time decay. Maybe. And I'm not really fussed about options liquidity. It's not like I'm buying 5,000 contracts like I was before, right? So I'm not worried about the liquidity and about going 0DT for liquidity. None of that stuff. So perhaps it makes sense to go a week out in the options contracts. So you got to think about these things.
That's interesting. Yeah, I feel like I would feel like I've just gotten burned so many times that I don't want to put a stop, but that's a terrible idea.
Yeah. Always have a stop. There are different ways of doing stops. That's all. This is just a different way of doing a stop. So think of it that way. And it brings in the other advantage where if it goes back in your favor, you're still in it and you didn't even notice. I mean, if you're not watching, you wouldn't know it was negative. And the way I like to trade, I don't look at it, right? So that's the best thing. You can just put it on, you can trust it, and you can get on with your life. You don't have to sit here and watch the screens. So
Would you ever put in a stop if it goes, let's say the opposite happens, it goes in your favor? Do you ever put a let's say you take $1,000 option contract, so it's going to go to zero. Do you, I don't know, put your stop at $1,000 of P&L on the futures, like trail your stop kind of situation into the profit? Does that make sense?
Yeah, I know what you're saying. With the options and doing it this way, I don't know if it makes sense. I'm not sure. For now, I do trail it at the moment, the way I trade. But maybe there's a way to do that. Again, that would be like, phase 2. Let's figure out how to hedge properly, and then how to make it more complex with putting stops in place once it's in your favor or something like that. Yeah. The stop would be, well, one thing is if the futures goes in your favor, you're just counting on that option to go to 0. So you're losing money there, and which is what you plan for. And that's what you want. You want this option to go to 0 and the futures to go into the target. That's where you make money. So anyways, yeah, these are more questions than answers at the moment. I have more questions than I have answers for you. And these are all things to figure out.
Yeah.
But
No,
yeah,
it's
that's it.
interesting concept, man. It's very doing something. The saying, keep doing the same thing over and over and expecting a different result. That's like the definition of insanity.
Yes, absolutely.
I feel like I'm going insane, man. I feel like
Mhm.
maybe it's the psychological part of missing, big trades after big trade after big trade just because I'm protecting my profits or protecting my account. But yeah, so that's why it's intrigued me, because I feel like I need to do something different.
Yeah. One of the things about that is you keep doing the same thing. A lot of times is because sometimes you hit a block just in your own mind where you're unable to be more creative and come up with ideas of different ways to do things or different things to try. And a lot of times, oddly enough, a lot of times the creativity block tends to happen because of your environment, the kind of people you're around. Basically, people keep just doing the same thing over and over again. You also become that kind of person. So then having an environment where people can think differently or where you can bounce ideas off each other, stuff like that, I find that is really a bit of a good catalyst to help you break out of a rut or break out of a problem that you're stuck with. And then you never know what you find. You put a few heads together, suddenly you come up with stuff, and that's the beauty of it. So that's one of my ways of trying to get myself out of a stagnant position. So try and see that. Try and think about that. So come in rooms like this. Come in here whenever you want. We can talk about stuff.
Yeah.
Or in our Discord, we can always bounce ideas around. We have the forums. Or just even just researching stuff, maybe looking at different things. Ask one of these AI things. You never know what it could put out at you. You at least have an idea, then you can bring that, and we can figure it out. All kinds of stuff.
That's true.
So,
Yeah, I'm not in any other chat rooms. Just a lot of noise in other chat rooms. I try to. I'm a loner, man. I'm a loner, so I just kind of go through everything by myself. Besides coming in here and obviously throwing stuff out here and talking to you guys, but yeah, no, I feel what you're saying. It's a good idea. Start bouncing ideas. Maybe I'll go into Chat GPT and see if they can solve my problems.
well, don't look at the AI stuff as a way to solve a problem, but maybe it'll give you an idea, a spark, and bring the spark in here, and we'll see what we can do with it.
That stuff is crazy, man. That stuff is crazy. I literally coded some stuff in TradingView. I've never coded anything in my life. Just from asking, hey, can you code this alert for me? And it works. I was like, we're all going to be out of jobs. If you're not trading or doing anything else, you're going to be out of a job soon. So it's incredible stuff.
Wow.
Pretty useful, yeah.
Yes,
They
be
just-
careful. Be careful.
They just need to get rid of hallucinations.
What's that? Host nations?
Hallucinations.
The AI hallucinations, yeah. They're still working on that.
What is that?
That's
I don't
when they
wanna-
make incorrect, when they give you incorrect information.
Now, how is that any different than most of the shit on the internet?
Yeah, it's like going on to Google. Google probably gives you incorrect. Whatever you type into
that's
Google,
true.
it'll give you the answer for it.
That's true. I
Yeah.
think I was listening to somebody the other day, and then they said just make sure that you ask for cited information and ask where that information is coming from. Otherwise, they will literally just tell you what you want to hear. So just be
Yes.
careful. Maybe not with coding, but AI is turning into like your buddy, and you're a psychologist, so they'll tell you what you want to hear. But if you want real information, make sure you ask them where it was cited, and then they'll tell you, oh, you want me to turn into research mode? Okay, I will. So and I've seen it happen, and hallucination is just they make up stuff. So just be careful.
Yeah, that's
Thanks.
great.
And maybe that's
Gotta be-
not the paid versions. Maybe that's the free versions. Maybe the paid versions are more advanced. And I'm sure the government hasn't given us the real AI because they're not going to ever give us that more advanced stuff. But the paid versions are probably better than the free stuff. So just FYI.
Good to know.
Cool. Thanks. Yeah, be careful, man. Be careful. Just like most of the shit on the internet, people will tell you what you want to hear and then they'll sell you a subscription. That's all there is. It's not too different. So it'll tell you what you want to hear. It's AI is pretty smart in that sense. Oh well.
So
What am I
I
missing?
saw you added all of these futures contracts that you're looking at. You need to add. I saw you added YM. You should add RTY.
Oh yeah, RTY was the Russell, is that right?
Yeah, and take away platinum. That's not
It's no
that's not
fun.
a good one.
Yeah. Yeah, well, just exploring things. I don't plan to trade any of this stuff in the near future. At least start learning about it. But yes, RTY, there it is. Decent little thing. Yeah, the breakout there. Down here, yes, same price action. Some of the other stuff. Cool, thanks. That's all there. Cool. What am I missing here in the chat? Al, what do you got? What if you just have two accounts, buy the same futures in opposite direction? One buys the other one. Well, let's see. If you buy in two different directions, you buy futures contracts, what's gonna happen? One of them's gonna lose, the other's gonna win. Ideally, I mean, if it's directional. In my mind, that would be a difficult way to make money. It cancels each other out, really. Right? Unless you're actively managing it, and you stop out one, and the other one goes. You can try that. That sounds like it's vegan. Quite stressful. But I don't know. Try it out. It's not something I think I want to try. What else we got here? Mark, you're off. Evo, you're off. All right. Lana, you're out. Okay, you guys talking about where you're from. Where are you guys from? Evo's former New Yorker. No, yeah, Mark's in Florida, Lana in Vancouver. Al, you're in West Canada. Omar, North Carolina, is that right?
Yeah, unfortunately.
Oh, good. I've never been there.
You probably will
Oh.
never come here, man.
Fair enough. All right. All right. So yeah, before we end here, I'm thinking this price action that we have here on the ES is well, it's been positive and now it's been sideways, which to me, well, first thing to understand is the market is likely to continue doing what it's doing, which is sideways. So it's likely to keep going sideways. I'll just keep looking at it every 30 minutes. But as far as the direction is concerned, the most likely direction, the next move is likely to be upwards because, well, it's been positive, the consolidation continues up, and it's in a good place for this consolidation, right? Below all these previous pretty good highs right here. Can you this all-time high or something? Yeah, so all-time highs. Yeah. So this consolidation leading to a seriously good all-time high breakout, maybe some point this week. Don't know. Maybe today. Don't know. So this is interesting. I'm going to keep an eye on this. What I would love to see is a long tail hammer in the middle of this consolidation. Any of these kind of puts in a long tail hammer, I'm likely to take that long and then just sit on it until it breaks out. So that's what I think could possibly happen. But for now, I mean, that's all just speculation. For now, the only thing that is happening is it's going sideways. It's going nowhere. So unless you have a strategy to trade chop, don't touch it. And that's all there is with this. All right, guys, this has been fun. We'll shut this one down now. Thanks for coming, hanging out. Get some rest. For most of you, it's nighttime out there. And yeah, we'll try and do this more regularly. Today was the first time we did this one. So if this was useful, let us know. Let us know in the Discord. Let me know in the Discord. Just type it in there somewhere, announcements or someplace, and see what the feedback looks like, and we can schedule more of these kinds of sessions. It'll be fun.
Appreciate you, man.
Sure.
Good night. I guess good morning.
Thanks, Ollie. Have a good day.
You too, guys. Take it easy. Good night.